Good morning. We'll go ahead and call to order the Property and Casualty Insurance Committee meeting of the 2022 NCOIL Summer National Meeting. There's no need to call the roll this morning. Will is going to mark everyone's attendance for us, but I do need a motion to waive the quorum. I have a motion and a second. All in favor? Aye. Also need a motion to approve the March 5, 2022 committee meetings that are in your binder. I need a motion and a second for that also. I have a motion and a second. All in favor? Aye. Also, the chairman wants to take just a point of personal privilege this morning to wish a happy birthday to my fellow colleague, Kentucky State Representative Rachel Roberts. Happy birthday, Rachel. And with that, we'll get right into this morning's committee meeting. With the first item on the agenda is using blockchain technology to lower state uninsured motorist populations. Here with us today is Robin Westcott, Vice President in Government Affairs and Legal Compliance for the American Association of Insurance Services. Robin, when you're ready, please introduce yourself and you may proceed.
Hey, good morning. Thank you. My name is Robin Westcott. My background is from the great state of Florida, which I still live in Tallahassee. I was a regulator there for a number of years, and especially on the property and casualty side, and as the consumer advocate for the state of Florida. Many of my presentations as consumer advocate were to working groups, to committees and legislators for our state. That was the beginning of when I really began to be interested in what data can do and how it works in our state. And as I left the state of Florida, in the Department of Insurance there, I moved into an area, AAIS. Now, many of you are probably like, oh, who are they? The American Association of Insurance Services. The best way I can describe it to you is that we are the only alternative program to ISO throughout the country for many of the property and casualty lines. So if you have a familiarity, we're an advisory organization, a statistical organization. So data is kind of our lifeblood. We make forms, rates, loss cost and manuals for many of the P&C lines. So that's who we are, and that's why data is interesting to us. And when I came to AAIS, we started working around how do we procure more data? How do we do better with the data that we have in order to help us build programs for the industry? So we kind of took our head up out of the sand and looked around and realized that the entire industry has a problem around data. Many times it's very proprietary, and over the past 10 years we've seen where data breaches and other activity makes data, especially that of our consumers, vulnerable. And as insurance companies, my kind of take on that is that we should be good stewards of the data that we have on behalf of our consumers. I never kind of left that whole consumer interest behind. So to bring us forward, I want to talk very briefly. It's very difficult to talk about the North Dakota project without talking a little bit about the beginning of OpenIDL, which is the Open Insurance Data Link. It is a distributed ledger blockchain technology that will help us with data in our industry. About 2018, we began to look at using this type of technology for data. We had design thinking sessions. Many of the states that are represented here, Mississippi, Connecticut, Virginia, California, Ohio, participated in those design thinking sessions, along with some very large carriers, Travelers, Hartford, Selective, other insurance organizations, Chubb. And began to look at how we could potentially use a blockchain network to solve some of our data issues. Now, that was how OpenIDL was born. And because of we're still a not-for-profit at AAIS, and because of our extreme commitment to trying to bring open source community into the insurance industry, we decided that the best way to protect the OpenIDL and keep it as an open source community would be to talk to the largest open source community in the world, the Linux Foundation, which if you have a tablet, a phone, or a laptop here, you're probably running on some sort of Linux underpinning. So the Linux Foundation accepted the OpenIDL as a project at Linux, and we donated all of the technology that we had designed into the OpenIDL project. So OpenIDL actually does live now at the Linux Foundation, and we're very active with our organizational members of Hartford, the Travelers, the Hanover, and others to start to build the network, specifically to begin with for regulatory reporting. As a stat agent, we wanted to bring the first part of the network up around how do we give transparency and how do we answer questions that many times a regulator has that's kind of immediate, right? And you guys can't wait 2 years for us to do a data call to make public policy. I think COVID was a very good example of that. We needed answers and we needed to understand some of the things that around our industry, but it was very difficult because there's no immediate access to data, right? You have to start thinking about the data call and how do you do that. So let me just kind of briefly touch on the technology itself and the design, because it's important. You have to understand what it is before you can understand the power and the potential that exists for blockchain and ledger technology. So everything you know about Bitcoin and any of this other type of thing in the market, and you think you know about blockchain, please forget it. That's not what we're talking about here. This is a private permissioned network where no raw data ever goes on the network. Okay, so how's that possible, Robin? When we have an OpenIDL network, a blockchain distributed ledger network, we take these really interesting things called nodes, and it's kind of like a data warehouse, data repository, and those nodes live inside the carrier's security walls, okay? So instead of you doing data calls or a state doing, other data calls and there are already other projects around getting a lot of data in these huge data warehouses. Instead of doing that, why don't we set up these individual data repositories inside and behind the walls of some very complicated and complex security at each company? And instead of passing data back and forth to answer questions, why don't we send the question to where the data lives and get an answer? Okay, is that possible? Yes, it is. Why is this important to do it in a blockchain network? Because the answer that's given in response to the question can be created as what we call a hash, or an identity is given to the answer, and that is what is written to the blockchain. So it's an immutable record, one block on top of each other. You can't change the blocks. You can make a new entry to show that something changed in the data, but the life cycle of that whole entire transaction can be captured on the blockchain without one piece of raw data being transferred. So that's very important. Some of the criticisms that have come, especially as we've looked at the North Dakota project, has really been around, we're going to put people's data on the blockchain. And no, we're not. We're actually going to make it more secure because we're going to create a situation where data does not have to be transferred outside of the environment that is most secure. What does that mean for data breaches and then cybersecurity issues that we have in front of us today? Well, that means that instead of having large breaches for everyone's consolidated data that's living in some warehouse, which might be a very secure environment, and there are always going to be attempts and places where people are going to try to get in and access that data. But instead of making that easy for the target to be a large assimilation of data, let's just keep it as individual data so that there's not a industry-wide breach. It might be a specific breach, but what it also means is that this network means that the place to get in looks a lot like that instead of a lot like that, right? So we're creating a network that allows for the security measures to stay much more in place for the data that we really think is important to steward for our insurance consumers. All right, so what are we doing in North Dakota, and why is this important? In North Dakota, John Godfrey, who is the commissioner there, who I have to absolutely commend and really appreciate the work and the attention that he's given on this project through his staff. I'd be remiss in not saying the same thing about Mississippi and Commissioner Cheney, Commissioner Mace in Connecticut, and some other commissioners have been very committed to this project. But Commissioner Godfrey thought, and we actually had one of the design thinking sessions in North Dakota, and he called in many of his top carriers, and we started talking about what would be a good use case. We've got all this work going on at the OpenIDL where we're building that data model, right? So the data model is important because you want the data in those repositories to have a structure that can be easily identified. So that work's going on over at the OpenIDL, but we've already built the auto data reporting module, which means that we have a format that people and carriers can start loading that auto data into their private nodes, and the repository can be there. But one of the things that we wanted to do is to start to test the network. Does this really work the way we think it will work? So Commissioner Godfrey has gone through the legislative process and was able to establish a proof of concept specifically around the uninsured motorist problem. Now, one of the things that we've seen is that there are already a dozen or so states that have certain reporting requirements for insurance carriers, auto insurance carriers, to send data. It's probably on a quarterly basis. It may be more frequent than that, but there's an upload, and it's a large data warehouse. These types of activities are burdensome and expensive for insurance carriers. Every data call, every stat reporting activity, and we're a lot of times replicating data, and we're reporting it to different places. So the auto data is a good example of that. And so you have states that have already said, hey, we want to know if there's a policy in force, right, for this VIN number. So Commissioner Godfrey's proof of concept that has come forward is let's see if we can do this very simply on a blockchain. We don't need the companies to load the entire auto statistical data plan. We just need a couple of elements of data, one of them being VIN number. Is this VIN number insured by this carrier? And what that means is that we can do that call, and the way we do that is we send what we call a smart contract or extraction pattern, and it asks a question of that data node that the carrier has, and it gives an answer. Now, right now, what we will be doing is setting up what we call an analytics node, so the answers to whether or not that there was a match can go into this analytics node for reporting purposes and that sort of thing. The same thing would happen with the statistical reporting, right? You would actually have some of that answers to your questions about the data. How many hip roofs do you have? How many wood constructions? How many claims? How many hurricane claims? How many this? How many that? Some of those answers can go in that analytics node and then be reported back out. So the North Dakota project, and the proof of concept for it is to start with one thing, this idea of matching the VINs for the Department of Transportation that they hold in North Dakota with the VIN numbers and a policy with the insurance carrier. Now, one of the great things that we can say about that is once we prove that this can be done, and we're pretty confident. We've run tests on the network before with the business interruption claims for COVID. We know that this technology can work. What that means is that the insurance carrier can then load that information starting monthly, you could actually go down to weekly. Eventually, this network could support a daily load of that type of data, which means almost real-time results on whether or not this car or this vehicle was insured. Now, the proof of concept is limited to 10 top 10 carriers for the state. We're not going to get a comprehensive answer for every VIN on this proof of concept. It's not designed to do that. The proof of concept is just to prove the technology works and that it can be expanded upon and scaled up and scaled out to create this connection, right? And that we can eventually go to near real-time data being reported. What's great about that is that, again, you don't need to know as the state that Robin Westcott at 5552 Pimlico Drive, Tallahassee, and yes, that is my address. You could find that anywhere. And my pickup truck, my old Ford pickup truck that I have in the garage, that was my daddy's. You don't need to know all that about me. You just need to know I insured that pickup truck, right? So just imagine if you could do that on a real-time basis and you could understand that, the scope and the implication of how we could expand the blockchain network. Now, one of the things I'll also point out, and I'm happy to answer any questions after this about the North Dakota project specifically, is that if you look at almost every one of the agenda items that you've had throughout this conference, and probably if you went back the last 10 conferences, has some implication around how we handle data and how hard it is in our industry. So if you can think of almost every one of these instances, whether it's a cybersecurity issue or whether it's pet insurance or whether it's health insurance or around insurability issues, if you thought about the ability to create these networks where data could be, insights from data could be shared and could be shared very quickly without compromising the individual's data, how powerful would that be for our industry? And so I'll close on that, and I'm happy to answer any questions you guys have. We have a timeline now with the North Dakota project. We're already loading data on our test node. So we have a meeting in about 2 weeks in North Dakota with many of the carriers that are participating. One of the carriers, North Star, who's actually an AAIS member already, has already said, "Yeah, we're good. We're go. Tell us how to do this, and we're ready." But we'll be meeting with the other carriers that are going to be participating in this. We're very excited about it. This is about building a network. This is about trying to make sure that we can protect our consumer data in a comprehensive way, but giving great transparency and democratization, and I use that term with a different intent than I don't mean democratizing our data to run around and be free. I mean democratization of our data with control and responsibility, which is, in my opinion, what democracy is about, being retained at the individual level. With that, I'll answer any questions you might have.
Thank you, Robin, for your presentation. I think we do have a question from Representative Thomas.
Hi, this is very interesting and sounds very good. My question, though, is who controls the question that gets asked? Because that's the only flaw that comes to mind. Because how you ask, that's a straightforward, right? Is this insured or not insured? Yes or no, I get that. But there are a number of questions which could get asked, which come to mind that could lead to assumptions that would be incorrect.
Okay, good question. It really goes down to that where I made the statement about it being a private secured network. So one of the things that happens in a private secured network is that the identity of the person asking the question, right, has to be known to the other participants. And permission has to be given or granted to allow that smart contract to execute against the individual data stores. That's why the work at the OpenIDL is so very important. It's where the permissioning tool, the ability to create those questions and say, hey, I have a smart contract I'd like to execute against, that's where those parties are known to each other, and that you have to be a member of the network. You'll have to have there's a steering committee that's a technical steering committee that will be responsible for much of the implementation of the security around that. But the interesting thing to that is that the OpenIDL, and I've given in my presentation, which I'm sure you'll all have a copy of, everything we do is transparent and built by the community for the network, even those permissioning provisions. For this North Dakota project, AIS will be developing the smart contract that will execute for this. But I don't see a reason that as the network matures that you won't have others that will want to leverage that, including the departments of insurance as they ask or issue data calls. It was really designed to the very beginning to answer data calls. But that environment, while the community can grow, the security and controls around that are really built in the open source community. Some of the again, the Linux Foundation, Red Hat often runs off of the Linux core. So many of that, how you do that, how you operate as community, how you build something in a collective like that is controlled through that process.
Representative Paul?
Yeah, it was just similar type of thing. Who would have access to this? Because, like you said, there would be a group that would do, but would this just be insurance companies that say, hey, in your example of the VIN number, well, if I can find out all these VIN numbers don't have insurance, I can just go ahead and market them and see if I can sell those guys insurance?
Yes,
or would the government have it and say, hey, these guys don't have VIN numbers or don't have liability insurance, and our state requires liability insurance, so I'm going to just go out and find these guys or ticket these guys at their house because they don't have insurance?
There are a number of possibilities that can happen. I think one of the important things we have to look at when you're building a network like this is that the insurance companies really need to have some benefit come out of it as well. And one of, I think, the good examples of that is that we've been working with USAA in the state of Mississippi and their emergency management so that if you could connect, right, some of the very immediate information that comes out of the first responders at a disaster, in a hurricane strike zone or in a flood zone. If you could get that information and an insurance company could have that very quickly, that could be very, very valuable information back to an insurance company to help their policyholder, right? And so I think that there will be applications, and I'd like for you to think about it sort of like how applications or business grew on top of the internet. I have the very big pleasure, and some of all of this work is kind of come out of AIS. My COO actually worked on the Internet Engineering Task Force for UC Davis in the day. Her name's Joan Zerkovic, and if you're really curious, go find the AAIS YouTube channel, and you can see her interview Vint Cerf, who is considered one of the fathers of the internet. And the idea that there are business applications that will grow on top of this network, it's the same principle as it is for blockchain, as it was for the development and evolution of the internet, right? The HTTP protocols, which she worked on, that runs the internet, right? But that's open source. That's not hidden to people. You can have an identity on the internet, right? You can run that activity. But what people have done to build applications and business applications on top of the internet are very, very important. And it's the same kind of concept. So, but There will be other industries we connect to. What if we can then connect to other industries like the automotive industry that will be collecting telematics data, not just on autos that we have right now, but autos of the future, self-driving. All these things, we have to have the ability to connect to other networks of data, and this is actually how we would do it, and this is the beginning stages of it.
Thank you. Any other questions or comments from committee members this morning on this topic? If not, thank you again, Robin, for being here. Thank you for your presentation. This is an important topic. Kentucky has struggled, Kentucky where I'm from has struggled to have real-time verification of auto insurance for years. As a retail agent, it's a lot of work on our part to send proof to the local county clerk's office when, if it were real time, it would take that responsibility off of us. So thank you for the presentation, and thank you for being here.
Thank you.
We will move on to the next topic, which is the continued discussion on Delivery Network Company on the Delivery Network Company Insurance Model Act. As our presenters are coming up to the table, we've been discussing this issue now for several months, and in the 30-day materials for this meeting, a first draft of the model was included, which I'm proud to be the sponsor of. That is going to appear in your binders on page 288 for those of you that want to follow along. I think the current version of the model is great, but we are certainly open to making changes to the model to make sure we get this right before we consider voting on it in the November meeting in New Orleans. So before we get started, I'll recognize my colleague, Delegate Westfall, who would like to make some brief comments.
Thank you, Mr. Chair. Yes, I'd like to be added co-sponsor to this piece of legislation, this model draft bill. I had some companies reach out to me during our January session wanting some structure, wanting some legislation, and I told them to wait until we get an NCOIL model to go off of. So for those reasons, I think it's a good bill. I've been reading it. I'd like to be co-sponsor, so thank you.
Okay, we'll move along to discussion, and this morning we'll start with Brad Nail representing Lyft. Brad?
Thank you. Good morning, Mr. Chairman, members of the committee. My name is Brad Nail. I represent Lyft. I did help to organize and facilitate the stakeholder process to date, and I think it'll be helpful for the committee to hear about that process and where this current draft stands relative to the recommendations made by that group. We had over a dozen organizations represented on our conference calls, including insurers, the insurance trade groups, and different companies that are engaged in delivery activity. We learned that there are some important differences between the TNC, the traditional Uber, Lyft business models that we're accustomed to now, and these delivery or DNC business models. In particular, there are no passengers being transported in DNC businesses, so the risk profile is different. Also, Lyft and Uber operated almost identically, so rules that applied to one easily applied to the other. In the DNC world, there are very different business models in play. So we needed to think a little differently from our TNC model in a couple of areas to capture all the various business models in our language. Now, the draft before you includes definitions in Section 1 that capture these various business models. In Section 2, there's language that acknowledges that there may be existing federal or state laws governing the transport of certain types of materials. In particular, we're thinking about hazardous materials that have existing limitations or requirements in the law. So we clarify in Section 2 that those other laws still apply and supersede these terms if there's a conflict. Section 3 lays out the insurance requirements and some terms on how insurance policies might interact with each other when there is a claim. Section 4 includes the mandatory disclosures to drivers, and Section 5 is the express authority for personal auto insurers to exclude coverage for this type of activity if that's what they want to do. So this framework works for all of the stakeholders that we talked with. There are a couple of areas where the language within this framework differs from the language that the stakeholder group submitted, and I think those differences are worth discussion here. First, a definition was added in Section 1F for delivery available period, and that period is included in the insurance requirements in Section 3. Now, many of the delivery company business models do not include a delivery available period. They might have drivers working from a schedule or in other ways, but they don't have people driving around logged into the delivery app awaiting a delivery dispatch. Some do. Some business models do that. So I think the intent here is to make sure that those companies that don't do that are not captured by this requirement, which is appropriate. But I think some of the stakeholders may have suggestions for clarifying this further and just ensuring that they're not unintentionally captured in the definition. A second difference between this draft and the stakeholder input is the insurance limit in Section 3B. The stakeholders suggested a liability limit equal to your state's minimum auto insurance limit. The draft references state minimum limits, but with a floor of at least 25, 50, 25. That structure is a little clunky for statutory construction, and the model may benefit from just establishing a more definitive requirement. Also, there are 25 states where the state minimum is below 25, 50, 25, so half the states would not be able to just simply cross-reference their existing statutes. Of course, it's ultimately your role as the policymakers, I think, to determine what the appropriate minimum amount of insurance for this delivery activity should be anyway. In that same subsection, there's a requirement of uninsured motorist coverage in the amount of $25.50. I think it makes more sense to remove the explicit requirement and instead include a drafting note that any other state-mandated coverage, such as uninsured motorists or PIP if you're a PIP state, or MedPay, whatever else may be included in your state's requirements, a drafting note that indicates that that should be addressed as well in the bill. There's so much disparity and variety among the states that it's hard to capture all those various schemes in a single model. The third difference is the inclusion in subsection 3G that expressly allows policies written on commercial paper to satisfy these requirements. I suspect this was included to try to allay the concerns of Buckle, one of the stakeholders, and I believe that Buckle has an alternative where this subsection 3G can be removed, and we also remove from the definition of personal vehicle the unnecessary reference to auto, cab, taxi, limo, et cetera. That was just borrowed from the TNC model and doesn't really apply squarely here. So I think Marty from Buckle can speak more to this, and the other stakeholders can render their opinions, but that may be a satisfactory solution. So I'll conclude here by just pointing out that we've had tremendous cooperation between all the interested parties, and I think the committee's in a good position to make final adjustments to the model language and be able to adopt it at the November meeting. So, Mr. Chairman, I'll be happy to answer any questions at the appropriate time.
Thank you, Brad. And we will have questions, but I'd like to hold those till all of our presenters have had a chance to speak this morning. Next, we'll move on to Frank O'Brien, Vice President, Government Relations at APCIA.
Thank you, Mr. Chairman. I'll leave it to others on this panel who will speak specifically to some of the comments that Brad has just laid out. I'd like to point out that NCOIL has developed a recognized expertise in the sharing economy space, and this is the third or fourth model that NCOIL has been developing, and we do expect that once this is in place that it will be moved forward in the various states. The other thing I would note is the presence at the table here in front of you, again, in recognition of NCOIL's leadership on this issue. You have the major players on this issue before you engaged in these discussions, and we appreciate your leadership, Mr. Chairman, in terms of helping us shape those discussions. So with that, I'll leave it to others to discuss the technical issues that have been exposed so far. Thank you.
Thank you, Frank. We'll move on now to Andy Parr, Head of Insurance with Uber. Andy, thank you for being here.
Hello, thank you, Mr. Chairman. I'm Andy Parr. I'm the head of insurance for North America at Uber, and appreciate the opportunity to get to speak with you all here today. As Brad mentioned, we've been working as a stakeholder group and have been very pleased and proud of the collaboration thus far on the model bill. I would say as a general comment, we're very supportive of model legislation in this space, and the bill as it stands today is definitely a great start. We do think that there is room for improvement and more work to be done, specifically with respect to the coverages and limits, as Brad alluded to. I'll specifically talk about the requirements under Section 3B, where today the bill as drafted requires 2550 regardless of whether that standard is required of other drivers or commercial carriers in the state. I would say, to clarify, Uber's position is that we don't believe that should be required for delivery network companies, as it's not an inherent risk that would justify the requirement of such coverage. However, if the coverage were to be required for delivery network companies, we believe that it should go no further than the minimum financial responsibility requirements that are already contemplated in state law. Today, the state laws in different jurisdictions allow for rejection of coverage in some instances, and where that would apply, we would expect DNCs to have the right to reject such coverage. And in those states where there's minimum limits required, we would expect DNCs to comply and to have and maintain those minimum limits. Today, the DNC bill goes a bit further with those minimum limits than even the Transportation Network Company bill, model bill that came from NCOIL, which is a bit nonsensical and I think is an area of opportunity. The TNC bill is silent on the issue and defers to the states and their ability to set the requirements for and other coverages as required by other law, and does not set a minimum floor for uninsured motorist coverage. If the DNC model bill were to go forward in its current form, you would have a couple illogical outcomes, one being that DNCs would have more onerous coverage requirements than TNCs in certain states where is rejectable, which doesn't align with the relative risk of the two different business models. And then secondly, more broadly, DNCs would be treated differently than other drivers and even other commercial carriers like taxis, and in those states where is rejectable. We see no need to have a mandated minimum limit in a model bill, and instead would defer to states to be able to handle that accordingly on an issue that they've largely already contemplated in the minimum financial responsibility laws. That said, we remain fully supportive of model legislation in this space. Obviously, there's still a little bit more work to be done before we would be supportive of the bill passage here or adoption more broadly. But we're certainly ready and willing to continue to work with everybody, stakeholders, to make progress to that end and look to find some mutually agreeable language. To that, I'll thank you all for your time again, and take questions if there are any at the appropriate time.
Thank you, Andy. We'll move along to John Schnotz, Assistant VP of NAMIC.
Oh, now it is. Sorry. John Schnotz, National Association of Mutual Insurance Companies. Thank you, Mr. Chairman. I'll try to be brief. NAMIC was part of the stakeholder group that the other speakers have alluded to. I think we had enough meetings to drive up Zoom's stock price slightly, which they probably needed these days. But anyway, I think what everyone else has said is correct. The current version is very far along, we think, toward a workable model. I will say, just from a general goal, NAMIC's goal here is to make sure that coverage is in place and that there's a clear legal framework to it, and this is very far along toward doing that. I will mention one other issue that was in the stakeholder draft that is important to us and we think important to include, and we don't think it's controversial at all, but it's a lesson learned from the NCOIL peer-to-peer model. There's a provision in that model that addresses what happens if a driver crosses state lines. I'm from Austin, Texas, so the idea of crossing a state line in a delivery is sort of far-fetched, but in some states it's not. And what that provision is there to say is that if that happens and you cross into a state with a higher limit, that the original insurance requirement would kick up to that higher limit, that you wouldn't have a gap there. And the only thing I can figure is that was left out because someone may have thought the floating limit structure in the current version made that irrelevant, and it doesn't necessarily, because you could still have differences. We'll take back any other consideration from this discussion today, vet it with our membership, but I have no reason to think we can't get to something we can support in fairly short order and before the November meeting. Thank you. Happy to answer any questions.
Thank you, John. We'll move on to Jordan Bailey with DoorDash. Jordan?
Thank you, Chair, and thank you, members of the committee. And also thank you, Chair Rowland, for your leadership on this issue. DoorDash, like others here, continues to support the development of a model bill I think we recognize the importance of establishing guidance for states to look to when they're thinking about putting together standards for insurance for this industry. However, I think we hope there can be continued discussion on several aspects of the model bill, some of which has been discussed here today. Another area, I think, is the extension of coverage requirements to the period when a driver is online and can review or reject trips, but it hasn't agreed to provide any services, which under the bill is referred to as the delivery available period. I think from DoorDash's perspective, we really view the delivery available period as more analogous to non-commercial commuting time for independent drivers. At least the DoorDash model, and I think others in this industry, is the same, is that during this period, drivers can reject as many trips as can review and reject trips all day. There's no minimum acceptance requirement. So they really are able to do other things during this period and are likely to do so, including commuting from home to work, maybe running other errands. And we recognize that the TNC model bill does cover online time, but we think there's kind of important differences between these two models, which would lead to possibly a different approach here. I think specifically, at least in the delivery context, delivery is much more likely to be supplemental versus more of a full or part-time work or gig work. Dashers, for example, are working less than 4 hours a week on the platform on average. So you can imagine it really is filling gaps in other kind of commitments or personal activities. I also think the fraud risk during the delivery available period is higher in the delivery context because there's a much lower barrier to entry to get on the app. So you can imagine it's very easy to sign up for the app, turn it on, and then, at least under the current model, get higher than MFR insurance coverage, at least in some states, while you're doing your personal activities or commuting work. I know we're limited on time, so we'll leave my comments at that and just say we really have appreciated being part of the working group with others here and look forward to continued discussions to get to a model bill by the end of the year. Thank you, Mr. Chair.
Thank you, Jordan. And then we'll move on to Marty Young with Buckle. Marty, thanks for being here.
Thank you, Mr. Chairman, and thank you for having me. My name is Marty Young. I am the CEO and a co-founder of Buckle. We are providing taxi, limo, personal lines, as well as our signature Buckle Gig product to drivers in over 20 states and servicing over 50% of the U.S. population. We have thousands of appointed agents. And Mr. Chairman, as an agent yourself, you know that some very common questions that a prospective insured asks their agent is, how much coverage do I need? And two, in these days, what happens when I turn on an app? And I'll tell you the answer to that second question is, I don't know, or it depends. And that is a very honest and true answer. So when we went down this process, we did it with the goal of creating clarity in that agent's office, clarity as an insurance company, so we can provide products like other insurance companies that meet the needs of the insureds, whether they're doing taxi, limo, personal, or gig, all the above. I think we've gotten to a model bill framework with a lot of detail in it that is, I think, over a 95% solution. We're really close. My suggestion, as a number of you know, I'm a West Pointer and career Army officer, is one of the principles I learned in the Army was KISS. Keep it simple, stupid. And again, I'll go back to that agent's office. I would suggest that, as Brad Nail mentioned, let's keep it as simple as possible. So we had originally asked and suggested, hey, commercial already works. You know, taxis and limos are already doing this. But it is probably easier to explain to somebody in that agent's office, all commercial is included or all commercial is excluded from this model bill. I think each state will do what it wants, but that's a very easy conversation. And I think the default of all vehicles are included in this is really easy to explain by an agent. The second thing is we would suggest not to make any changes to statutory coverages, whether those are new coverages beyond what a state requires by law today, or changes in limits beyond what a state requires by law today. Again, I go back to the agent's office. I want to equip our thousands of agents to say, sir, these are the statutory coverages you're required, and when you turn on an app, those statutory coverages remain. And that is as easy as it gets for an agent to explain. So we would simply say, we think we're almost there in terms of the bill. Let's keep it simple, stupid, if I may. I'll reflect myself in that, not all of you, but in support of our thousands of agents trying to basically do the right thing and explain these coverages in order to provide our ultimate goal, which was clarity to insureds, to the public, et cetera. We would suggest that approach. Thank you, Mr. Chairman.
Thank you. I think we do have one more presenter this morning, Daniel Guzman, General Counsel for Favor Delivery. Daniel, if you want to come to the table or use the microphone, whichever you prefer.
I can use this mic. Thank you. Yes, Danny Guzman, thank you for having me. I agree with a lot of what's already been said, so I'll be pretty brief. I do think this is a great framework. I do think this is some necessary legislation to close the coverage gap that currently exists. And I'll probably echo a lot of the same feedback that my colleagues at Uber and DoorDash had as to the details of the bill. I'm confident that we can work out, the few tweaks that are needed to get this done by the next session. So, in general, just very supportive of the bill and, happy to be part of the process.
Thank you. So we do have some questions from members this morning, but first, just so I'm clear, Marty, are you okay with the language that is in Section 3, Paragraph G, that says a commercial automobile policy that provides coverage for these deliveries may be used as long as it and the driver comply with the Act?
Yeah, Mr. Chairman, I think it's superfluous if we go back to the definition of a personal vehicle and remove E3, Section 1, E3. So if you strike that clause, not an auto cab, taxi, limo, autobus, jitney, motorbus, or other hire vehicle, the, quote, commercial exclusion is essentially pulled out. So this applies to all vehicles, whether personal or commercial. And again, that's easy for an agent to explain. So we would simply suggest that if you strike that, it gets simpler. Strike E3. There is a question of, well, what happens if I'm driving a, quote, taxi cab with a medallion on a certain geography, which other laws kick in effect, where I have to have higher than, quote, a $50,000 limit in certain states? Well, this is what Brad pointed out in Section 2, interaction with other law. Then there would be incumbent on the delivery network company, if the commercial insurance did not apply, to basically make sure that liability was in place.
Thanks, Marty. Glad to hear that. I think it makes it easy for your retail agents to say, look, just to be safe, if you want to be in compliance with the DNC model and the law, buy our product, we're following each state's law, you're covered. So
that's right, sir.
Okay.
As you know, explaining this to folks with clarity and confidence is essential that we set up our agents for success.
And then I guess to comments that Jordan made around the delivery available period, my only concern there would be if the app's on and you've got a driver that's surfing for different deliveries and he's excluding those all day long, he has an accident, and during the discovery period someone finds out he had that app on. What if the personal auto policy excludes that? There's no coverage either place. How's that going to be addressed?
Thanks for that question. I think that's something maybe we can further discuss in the working group. I'm curious if there's changes around the exclusions in the bill that we could make to address that issue. I think there's also probably tweaks to the definition of online time that we could make as well that would address some of our concerns.
Thank you. We'll move on to questions for members. Representative Meskers.
I have concerns about the business model, and they're simple concerns. In extremis, as a individual, and I sit on my insurance committee and I represent my constituents, we've got a business model where people are using an individual car for deliveries, right? And we're switching from their personal insurance to a professional or commercial insurance with different caps. So I think an accurate look at the business model and a conversation with property and casualty insurers that are dealing with the personal car owner's insurance. I want to make sure when we increase the circulation of cars that are delivering on a commercial basis, I want to know what their coverage is versus personal cars. Because if we increase the delivery service and we have essentially a market that is potentially underinsured, we're going to end up with claims that end up on the personal car owners when we have a crash, and that the cars in circulation and the accidents on the commercial vehicles don't protect the homeowner, the car owner, the individual car owner who's involved in those crashes. So I'd like to know what the loss histories look like for the delivery services. I'd like to know whether that's borne by the individual consumers who have personal car insurance in those accidents, that we have the adequate levels of insurance. I understand, the Taxi Limousine Commission, very simple story. My son was involved in a three-way accident, no fault of his own. The coverage limit was $10,000. So that ended up on my policy, right? So my concern is going to be, are we transferring the risk and the profitability into food delivery service companies and taking the homeowner or the individual personal liability car owner is paying for that? So I'd like to know what their loss histories look like and make sure that we're an adequate assessment, not just using a business model that may or may not work. I mean, we're talking about a volume of traffic that's going to be transferring, and all those drivers going from their personal coverage into a professional coverage to do this business. And if I'm bearing the risk as the individual insured on a non-commercial vehicle, I'm not happy that I'm doing a transfer there. So I would look for some guidance from NCOIL or from the industry on property and casualty for losses on commercial versus personal vehicles when they're being involved in this kind of business model.
I'll defer to the industry on that, and if they, Brad, do you know? Can you comment?
I'll just say that I think the issue that you pointed out is a relevant one, and it's one that we did really tackle in the TNC debate, where someone is transitioning from using a personal auto on a personal auto policy to commercial activity under a commercial policy. And I think we have enough experience under our belt in the TNC context that we know how to make that work, where the individual insurers can cover or exclude that activity as they wish. It's clearly communicated in the policy, and with a model with legislation like this, we know that there has to be coverage in place to step in those circumstances. So I think
I appreciate there's coverage. My question is the coverage adequate to cover the damage done, or are you transferring risk to the third party involved in the accident because the delivery coverage doesn't cover the damage done? I mean, that's a problem, I think, already in the taxi and limousine business, that it's transference, and I'm just worried.
Sir, we support taxi and limo in over 20 states right now. We are currently covering not just delivery of people, but also delivery. A lot of our taxis are doing delivery right now. And for example, Chicago, it's $300,000 are the minimum limits to do taxi. The way this is constructed, as Mr. Nail explained, is that if one of these taxis in the future is doing delivery and we're not covering it, because they are a taxi doing with a medallion in the city of Chicago, there would still be a $300,000 limit, because they would have to comply with the laws, I believe in Section 3, if I remember correctly. So the idea isn't that if you've you're doing taxi or limo, your limits will go down. Because you're doing taxi and limo and it's already regulated by other regimes, in most cases, the limits are going to be significantly higher than what this model bill may contemplate, specifically for taxi and limo. And I'm sorry about your son and your
it
household,
wasn't a
but-
horrible. It was a marginal problem. My point is, I want to make sure we're not transferring risk from a business model with commercial insurance now to individual car owners with their liability insurance, because the accidents are going to be involved with the delivery guy, with you and me driving down the street with our family, and I want to make sure the coverage, because we're increasing the circulation under a different coverage level, I want to make sure it's adequate, and that business model has to be looked at.
Representative Lehman.
Thank you, Mr. Chairman, and kind of maybe to build on that, when we were very instrumental, worked really hard on that TNC language, and I think what we landed in the end was, and the draft has in it, and states may do it different, but we put $1 million to kind of to address the issue of is it adequate. So I know some of the pushback has been, well, there's a difference between hauling people and hauling stuff, but I'm more concerned on the third party. I'm the guy that gets hit either by an Uber driver with someone in it or a DoorDash with food in it. I'm still the third party. So I'm a little concerned that we're kind of defaulting to state minimum, even if we reference, but there might be some other statute that raises that, like taxis. I guess I'd like to see us continue down the path of why it's different for the driver who's the only thing hauling different is people versus stuff, that would have that automatically default to a lower limit. The second issue I have is on the I know we didn't address that in TNC. And UM's just, there's so many nuances different state by state by state. But I guess I want to go to the issue of from a rejection standpoint, because when I look at, and I'm a broker, but when I look at rejecting coverage by the entity on their drivers, like I write a lot of trucking risks, they don't, but if they would reject they're rejecting on behalf of all their drivers because they're the owner. They're the owner of the policy. They're the named insured. They then, in turn, are providing coverage for those drivers via workers' compensation, because while they're driving, they get a work comp claim. What do I have if I'm an Uber Eats driver or a DoorDash driver, and you've taken the you've waived the it's been offered and you've waived it, because my state requires it be offered. And each state's going to be different in that nuance as well. But my state would require it be offered. You could waive it. What protection do I now have as a driver if I'm involved in an uninsured motorist claim?
Let me answer the first part of your question, if I may, because we do a bunch of very different risks in the so-called gig economy. We would simply observe, and anecdotally, I think you can all relate to this. You really don't want to order some food from someplace 20 miles away, right? You're not going to do that. Most of the delivery that's going on is hyper-local. Grocery stores are really close, restaurants are really close. You're not going to order something that's more than a few miles away, if that. And so what you see is the driving is actually a very, very different risk class than so-called rideshare, where people are taking rides to airports. I've even taken a rideshare. Won't tell you guys which one, from here to my home in Pennsylvania. And that's a very different risk when you're doing big highway miles. But most of the delivery, it's very, very hyper-local. It's trips to the grocery store. It's trips to the dry cleaners. It's trips to things that are just within a few miles. And so these are not, in general, high-velocity activities.
And then with respect to I would highlight a few things. One being that the difference between the transportation network companies and delivery network companies, when we speak about UM for DNCs, it's specific to the driver, as you correctly pointed out. There's no passengers in the vehicle. And those drivers would be aware of the coverage that's afforded to them by notices, by the platform before their participation. So they would be fully aware of the coverages that are there. And this would be in states where drivers have the option to purchase perhaps, but many drivers may also reject that on their personal auto policy. And I think there are other options that are available for those drivers if they so choose to participate on the platform and still want protection. There are occupational accident coverages that are either included by some platforms by default or for optional purchase that would be able to help fill the gap for those drivers that did want to do so.
And as an insurance company, we view that as our job to create such products.
So one question I have on those products, I've heard that too, is we do offer some sort of occupational coverage. Is that in compliance with work comp statutes within the states?
I would say it's not a workers' compensation product, so it offers similar protections for injuries and wage replacement, but it's not necessarily the same as a workers' compensation product.
Okay. And I want to go back because when you made the comment, that it's a different exposure. I'll push back a little bit on that because I know, taking you to Pennsylvania is different than someone driving 5 blocks to my house. But if I'm the person that gets hit because they ran through a stop sign 1 block from my house, I'm still at a state minimum limits. And I'm going to end up back on my policy under an uninsured motorist claim. So I know the exposure is different, but when you have the word dash in your name, it tells me you're moving at a pretty good pace. Okay? So, and I'll be honest with you, we were in Indianapolis, and there was a Jimmy John's, and they deliver. This guy pulls out from his little Jimmy John's pickup spot, cuts across like 6 lanes of traffic, and runs a red light. I don't know where he's going. He might have only been going 2 blocks, but there was no traffic. So my question is, if there's traffic and he still runs a red light, he's only 1 block from delivery, but he could have caused a serious accident that now he's, by this model, he would be defaulting to state minimum limits. I think that's an issue we really have to discuss before we get to a conclusion.
Thank you, As you know, sir, we generally build products that address what I call the 98, 99% of situations. There will always be kind of those situations where, you do have bad actors, you do have fraudsters, you do have people that really probably shouldn't even be on the road. As a commercial insurance company, we try to match price to risk. But certainly, I believe all the TNCs and DNCs here are trying to find that driver and turn them off. And, and certainly, I think all the interests are aligned in doing that.
Thank you. We have 2 more questions, and then we'll need to move on to the next topic this morning. Next question comes from Senator Filskowski.
I'm actually going to pass because it was answered. Thank you.
Thank you. Then the last question this morning will come from Representative Paul.
This is quick. I'm from Texas also, so this idea of other states was kind of throwing me off. But if we don't put a limit in the code, like we were talking about this, the 3B or whatever it was, can the carriers, the insurance companies, can they sell this product? Because if it's changing, you don't have no idea what state this guy might drive through. Would you just automatically sell him at the highest minimum that would be? Heck, if it's in New York, the highest minimum, I might be in California, but I'm paying that because I might drive through New York one day. How do you set a price on that to make it work?
We write a lot of Texas business in Houston, and there are a lot of folks that go into Louisiana and vice versa. As an insurance company, we know how to solve this problem, price appropriately based on where people live. It's a very, very common problem. Although Texas is a big state, you do have some neighbors where we have a lot of familiarity with not just building products, but explaining to our customers how these things may interact, not just when they go to different states, but when they drive into Mexico. So we know these problems quite well, and I believe as a commercial insurer and as an industry, we know how to solve that problem, sir.
Yeah, so basically, by experience, I know, I live in Houston, so you know by experience if I'm working in Houston, this guy's 10% of the time is going to go to Louisiana, or he might go to Mexico. You put that in your price and you solve it out that way.
That's correct, sir. And again, we do admitted lines, so everything we do is in partnership with the TDI. Yes, we know how to do that.
And that's
Thank you, Mr.
the
Chairman.
answer from the insurer perspective. From a statutory perspective, most of your states are going to have deemer statutes or something in the law that already dictates that the higher limits apply when you travel in another state. So this, what John was speaking of, would be replicating that here within this context. So there's consistency between what happens on a personal auto and what happens here.
All right, thank you.
Yeah. Your personal auto insurance policy works that way, actually. If you buy minimum limits, and I hope you're not buying minimum limits, but you go to a state that has higher limits, your personal auto insurance policy automatically defaults to the higher limit. So they're
Okay, that's good to know too, because but we had a similar situation that this gentleman was talking about. You know, when you have you got minimum limits, but people hit you, the minimum limits aren't even carried. So 90% of the time, you got to use your underinsured motorist all the time too. So thanks.
Thank you. And I appreciate the discussion this morning and the work that the working group has put together and your suggestions to us on what the model should look like. The committee will keep working on this, and we'll make some decisions on what we think the final product should look like. I am hopeful that at my last meeting as chairman of this committee in November that we can pass this. If we need to have, I'm open to if we need to have another interim call or Zoom meeting to work out some of these issues we've talked about today. I'm certainly open to that, and we'll coordinate that with Will and Tom and with you all. So thank you all again for being here today. We will move along to the next item on the agenda, which is the introduction and discussion of the NCOIL Dog Breed Insurance Underwriting Study and Breed Protection Model Act. The primary sponsor of this model, Assemblyman Cahill, is not here today, so we'll hold off on the committee discussion of the model and instead hear briefly this morning from the co-sponsor, Representative Nuccio, and from the speakers that we have on the agenda. After today, we will discuss with the sponsors how they would like to move forward this November on their model. So at this time, if you would, Representative, you may go ahead and make your comments.
Thank you, Mr. Chair. You can find the model on page 293 of your binder. I'm happy to bring forward this model legislation as a co-sponsor, and if necessary, after we decide what's happening in November, to be the primary sponsor going forward. I know there's been discussion around whether or not it's wise to have both underwriting provisions, which are Section 2, and the data collection provision, which is Section 3 of the model in the same bill. Having both is a unique approach, and states that have addressed this issue have basically chosen one or the other, so this is definitely different from what we've seen in other states. I am supportive of breaking them out if need be. If people don't know, not only am I an insurance legislator in the state of Connecticut, but I also work in the industry, and I believe that we have an accountability and a transparency requirement that we should have. And if we're going to be pricing things differently, then we should have verifiable and sustainable data to validate why we're pricing them differently. So I think we have 4 states now that have passed legislation similar to what we have here without the 2 being mixed, and 2 that are doing a data call. I do have some concerns around the data call that is out there, and I would be willing to work with anybody to refine that down so we are actually looking at claims that are relevant to the pricing of different policies for different breeds. So with that, I'm interested in hearing from the speakers that we have here today as to what their thoughts are on the legislation as it stands or the possibility of splitting it out. And I look forward to working with the committee in the future. Thank you very much, Mr. Chair.
Thank you, Representative. We'll start with Letty today and let you make your comments. And then after that, if it's okay, whoever's next, just introduce yourselves one at a time, give your comments, and we'll kind of go that way.
Thank you, Mr. Chairman. Leedy Van Cavage, Senior Legislative Attorney for Best Friends Animal Society. And we really thank the chairman, all the members for bringing this forward, the co-sponsor of the legislation. We are supportive of a model act because a framework is needed. This year, Arizona was the latest state to pass a bill, and last year, Nevada and New York also passed legislation. So it's fitting that we're here in this shadow of the Statue of Liberty, because Best Friends believes that pet owners should have the right to, responsible pet owners should have the right to own whatever breed of dog they choose. And we know that dog breed is not a factor in bites. We had a wonderful testimony on it in Scottsdale, and since that time, there was a study that was mentioned in Science magazine where it says dog breed is generally a poor predictor of individual behavior and should not be used to inform decisions regarding the selection of a pet dog. So we wholeheartedly believe that. We like the approach of Section 2. We think that's a very, very good start. But we do think that the data collection can be flawed, Section 3. Massachusetts has shown us that, not to disparage anything from Massachusetts, especially with my good friend Mr. O'Brien here. But again, we think the data is extremely problematic, and breed of dog simply does not matter. So we would prefer something like Nevada did, where they said basically an insurer may not ask or inquire about a specific breed of dog. But again, we're excited about NCOIL taking this up because it is going to keep popping up. Over 60 million families own dogs. 95% view them as members of the family. And when you get a dog, you don't think, I need to contact my insurance agent. You just don't think about that before you adopt a dog. So that's one of the things that, we want to make sure consumers are protected and they don't have to lose their insurance or find another agent simply because they adopt a dog. And housing and insurance is the number one reason why dogs end up in animal shelters in the United States at a huge cost to our taxpayers. So thank you. And again, we're very supportive of a model, and we love Section 2. Thank you.
Thank you, Mr. Chairman. And lady, I used 2 envelopes outside the House chamber to put together that language in Massachusetts, not just one. So I think that reflects that.
You needed a third one.
Thank you, Mr. Chairman, and thank you to the committee. This issue has bedeviled NCOIL over the past several meetings where we have had no amount of controversy associated with it. Notwithstanding that controversy, and in keeping with the legislative and political process, which we are all familiar with and a part of, still there were several opportunities for engagement and discussion amongst the parties, and that indeed did take place. Our good friend, Assemblymember Kevin Cahill, was able to put together a draft which we believe, on behalf of APCIA, represents an excellent starting point for a continued discussion relative to this issue. From an insurance industry point of view, the fact that there is a dog in a premises does represent an increased risk. However, we do understand and appreciate that our customers' attitudes toward dogs and other pets in the household has changed, is changing, and will continue to change. Nonetheless, we believe that particularly Section 2 of this particular bill does contain language that provides us with the opportunity to have an appropriate balance between our need to evaluate risk and to price accordingly, and as a result, to provide the product. So we expect to have continuing discussions relative to that. I'm optimistic that a solution can be accomplished, and perhaps somewhat surprisingly, given the level of controversy associated with this issue, I think there's a very good opportunity for a compromise between the parties to be available in time for the November meeting. Relative to the data provisions within the bill, looking at it, there are significant differences of opinion amongst folks relative to the data provisions. From our point of view, the point of view of the association that I represent, we believe that it would be an appropriate policy decision on the part of NCOIL to remove the data gathering provisions, particularly if the language in the earlier part of the bill is accommodating for all of the parties. So to sum up, we believe that there is a model here that we can work with. And once again, NCOIL has succeeded in bringing the parties to the table and producing a possible route for a solution to a problem which has been highly controversial for a number of years. With that, Mr. Chairman, at the appropriate time, I'd be happy to answer any questions.
Hello. Thank you for having us today. My name is Jessica Simpson. I'm the Senior Public Policy Specialist with the Humane Society of the United States and here in support of the proposed model legislation. A growing consensus of public and private entities have acknowledged that dog breed is not a reliable indicator of behavior and that breed-specific laws and regulations do not increase public safety. While historically the insurance industry has been allowed to impose exclusionary policies on dog owners without evidence that certain dog breeds are riskier than others, policies with limitations and restrictions on dog breed severely reduce options for consumers, disproportionately affecting low-income households. These types of policies contribute to housing insecurity, unnecessarily use up finite resources of local animal shelters, and cause undue harm to responsible dog owners. We appreciate the committee's consideration of this important policy. However, we are concerned about the data provisions within the model. There are no formal statistics on or reporting mechanism for dog bite incidences in the U.S., which means that often information collected is based on physical descriptions, which are influenced by personal biases. Additionally, numerous peer-reviewed studies show that dogs are individuals and that breed is a complex issue that doesn't neatly translate into predictive behavior patterns. Consequently, we believe it is not a good practice to rely on subjective, often unverifiable information in an attempt to determine risk analysis. The flaws in this approach have been validated by much of the unhelpful data that Massachusetts has collected over the course of their 3-year period. So rather than arbitrarily excluding certain dogs, and we believe that insurance companies should identify individual dogs that have displayed a dangerous behavior and use that information to evaluate risk. So thank you again for your consideration. Happy to answer questions at the appropriate time.
Thank you for having me here today to testify for the elimination of breed-specific underwriting practices in the insurance industry. My name is Ngozi Anaji. Although new to this space, the legislative regulatory space, I am not new to the insurance industry. With 25 years of experience, 2 degrees in the insurance industry space, holding various leadership positions, including that of National Board Member of the National African American Insurance Association, I sit before you today as a Black independent agency owner in Connecticut, here to provide a different perspective. As you might be aware, America has had a long history of negatively connecting dogs to race. Since slavery, society and government has feared the ownership of dogs by people of color. It has been documented that even the forefathers of our country, George Washington, Thomas Jefferson, whipped and even killed their slaves for having dogs, also hanging the dogs that they've owned, that the slaves owned. Some states even wrote into law slave dog bans, like South Carolina in 1859. We see the same systemic racism occurring over time through pit bull bans in Miami and Denver to keep Latinos and Cuban immigrants out in Sterling Heights, Michigan, where supporters of the ban felt it was necessary to keep inner city people out of their towns. With that, I'm sure you're asking, why do I care about breed-specific underwriting practices? I am a Black agent, and I view this as a modern-day version of redlining. These policies adversely impact my ability as an agent to assist the Black and brown families that I serve, and help them live in the communities that they want to live in. It prevents me from helping them protect, in most cases, the largest asset that they own and create generational wealth. To underwrite to breed and not to behavior is discrimination and speaks to the inherent bias that exists in the data, the process, and the outcome. The National Caucus of Black Legislators agreed and passed a resolution in support of eliminating these breed-specific restrictions. I know the language that I'm using here is a little strong, and I recognize insurance companies are not intentionally trying to discriminate against their insureds. However, my intent here is just to bring forth a perspective that needs to be considered and an appreciation around the implications that these restrictions have on race and discrimination. I have reviewed the language, and I'm in support of what has been presented here. and for the reasons given previously. And I thank you for your time.
Great. Thank you, Chairman Rowland, members of the committee, for the opportunity to speak today. Thank you for your leadership and much needed common sense in our home Commonwealth. It's going to be greatly missed in Frankfurt in years to come. My name is Tony Cotto. I am a former NAIC staffer, former regulator in Kentucky, and now serve as Director of Auto and Underwriting Policy for the National Association of Mutual Insurance Companies. On behalf of our more than 1,500 national, regional, and local carriers, I'm here to express significant concerns with Section 3 of the Exposed Draft Dog Breed Insurance Underwriting Study and Breed Protection Model Act. As with virtually every other risk and rating factor in the extremely competitive homeowners and renters insurance markets, the propensity of dogs to cause damage or losses is one for which different insurers take different approaches based on the information available to them. The industry is far from monolithic here, and this competition ultimately benefits consumers, especially the 60 million households with dogs that we heard about earlier around the country. Whether and to what degree a dog's breed affects the risk its presence in a home creates, either for its propensity or for the extent of harm that it could cause, is a matter of ongoing debate. That debate, however, will not be resolved by Section 3's mandated 2-year-long data call with a collection of extensive detailed claims data, particularly since the data in question may actually be impossible to verify or highly subjective and prone to conflicting accounts. I think that's actually something we've heard across the table, is the way that the data is collected and what data is being collected is highly subjective here, especially when you talk about whether a dog in a particular claim was, quote unquote, provoked. There's going to be differing accounts of that, of what happened there, or whether it's been the subject of past training. There's a lot of different training out there, or undefined complaints. People complain about a lot of things that are never substantiated when it comes to a lot of these pets. So particularly in the current environment where we as an industry are facing ever more detailed data calls, the investments of time and costs of this complex data collection effort would not be insignificant and would ultimately be borne by all policyholders. So particularly in light of the fact that Section 2 of the bill already reflects a certain level of policy judgment, right, with that solely language of the relevance of breed, NAMIC respectfully, we'd recommend the removal of Section 3. And alongside, everyone at the table, I'm committed to doing the work that needs to be done to get this to a decent place.
Thank you all. Thank you for being here. Thank you for your presentations. As was noted earlier, we're not having committee discussion on it today, but we are going to work with the sponsors and see how they would like to proceed. It sounds like there might be the possibility that this one could be considered at the November meeting in New Orleans. So thank you, and thank you all again for being here.
Thank you.
We'll move on to our final topic this morning, which is the continued discussion on the NCOIL Insurance Underwriting Transparency Model Act, another issue that we've been discussing for several months. And a lot of work has gone into this one. I'm going to turn it over to the sponsor of the model, Indiana Representative Matt Lehman.
All right, thank you, Mr. Chairman. First of all, I want to thank everybody who has participated so far. I'd be lying if I didn't say I'm a little disappointed at how there's not been as much engagement as I thought there'd be from the industry. A lot of side conversations, but we did get some input. But we've gotten closer. I think if you look at what we've worked on, and I guess I'm going to start with a summary and end with a summary, and that is this. I think long term, the collection and the use of consumer data by really any industry will continue to be scrutinized and viewed through this lens of privacy and transparency. It's either going to come down from lawmakers or regulators. So with that kind of as the backdrop, what I'm really kind of after is if you look in page 284 in your binders, I laid out a letter there that basically lays out the current issues that we need to discuss. I think that there's the latest versions there with some underlined. We do need feedback on this, and I urge everyone from legislators to the industry to give feedback on this as we get this into place for public policy. If you look at recent developments, what's happened in the state of Washington, I think we're heading towards that where there's some urgency to this, and I think there needs to be this conversation on these issues, because if not, I think the default, and I'd kind of maybe end my summary with this, and that is we just have to come up with a better answer to the question of what has impacted my rate. Why did my rate go up 15, 20%? The answer of we just don't know is not acceptable. And part of that problem is, I think, silence and some ambiguity in those responses just creates massive amounts of doubt. So when I tell my client, I'm really not sure. The company took an 8% rate increase across the board, but yours went up 18%. And I get the answer, what's the insurance score, the vehicle score? And those are all, I'm not ban those, but that's not an acceptable answer. And so immediately they go to, well, is it this? Is it this? Is it this? Is it this? And I don't know. I don't know. So I appreciate the industry's engagement in this. And I think, again, if you look on page 286 or 284, I should say, I think we're down really to about 8 or 10 issues that just need to be debated and resolved. And I really want to get this to a place where we can put a model out, get this into some of the states before the regulatory response is, it's just not going to work, and you're across the board, and there's some bans. So that's where we're at right now. I appreciate it, Mr. Chairman. I'll turn it back to you for discussion, and I look forward to the engagement, not just here today, but in the next couple of weeks and months.
Thank you, Representative Lehman. We'll hear from our presenters now. We'll start with John Schnautz. NAMIC.
Thank you, Mr. Chairman. Thank you, Representative Lehman. John Schnautz, National Association of Mutual Insurance Companies. Just for some level setting, we did early this morning send some comments in response to the memo that had been in the 30-day materials. Those comments cover in much more detail than I'm going to do today our general thoughts on the model as it stands in the 30-day materials. Also tried to answer all of the specific questions that were included in there. From a broad standpoint, NAMIC is very supportive of the concept that accurate, transparent information provided to consumers so that they can make intelligent decisions in the insurance marketplace is a very good thing. We also understand more specifically the concerns that Representative Lehman just expressed about the need for more specific disclosures, and I hope it's clear that we remain committed to trying to work towards something that we think will have real value to consumers. With that said, I do want to be clear that we don't think the 30-day materials version is at that point yet, certainly, and I can be more specific. I'll try to be more specific in just hitting some of the high points of our concerns, but again, the written comments that are available, we'll go into that in more detail. First of all, we think the disclosure is far too broad. There are basically two disclosures included. The first one appears to be a general disclosure that almost anyone could make and that would charge the insurer with determining what the 10 most important factors are in calculating premiums and trying to respond. We don't really think that gets at the heart of the matter. It has concerns for proprietary information, all sorts of other points I can elaborate on if there are questions. On the more individualized concern, it is closer to what we think we could support or what industry could do, but it also has a lot of issues. Namely, it injects this concept of not inherently related to the risk. I'm sure that was well intended to try to limit the factors that are included here, but it really interjects another subjective concept into the bill that we think would just make it more complicated. Further to the point, it is not as clearly limited as it could be in our standpoint to external data, which we think what this bill is basically about, and we think there are ways to make that standard more objective. And then a final point, it is not an on-request process, that particular notice, and it also applies to things other than premium increases. And we think from a practicality and cost and value standpoint, the thing to focus on here would be premium increases, and premium increases that, as Representative Lehman alluded to, are not simply driven by, well, their rates went up 10%, so yours did too. And we know that's not the goal, but we think that concept can be nailed down a little bit more. And then I guess the final point I would make is understanding all the concerns that Representative Lehman stated and being very much in sympathy with them. I do want to put out the concept that complexity in insurance pricing, and I don't think anybody could argue that it hasn't gotten more complicated and isn't probably going to get more complicated, is not an inherently bad thing. What's going on here is insurers trying to use better data to better price their products, to better serve markets, and ultimately that benefits the insurance market and we think benefits consumers. We know it's not the goal of this to in any way undercut that, but we do think it's very important to try to strike the balance between processes that insurers can implement at a reasonable cost that will have actual value to consumers, and that those goals stay in line and that we not do more harm here than good. I'll close with that. Happy to answer any questions at the appropriate time.
Thank you, John. And now here this morning to wrap everything up and put a big pretty bow on it is our friend Frank O'Brien.
Thank you, Mr. Chairman. I'd like to thank my rotating staff of co-stars who've joined me at the table today. So I'd like to thank the Academy. This award has been tremendous. Mr. Chairman, at the previous conversation regarding the dog breed bills, I joked that notwithstanding the criticisms associated with the Massachusetts data gathering provisions, I did use 2 envelopes to put those together. This is what I would refer to as a 3-envelope issue. Representative Lehman has put forward an issue that goes fundamentally to the heart of our relationship with both the producer community as well as with our customers. And he put his finger on one of the key items here, which is if you can't really explain how the price was arrived at, how is someone going to be able to take your word for it that the price that you arrived at is the correct price? And they're going to walk away with some doubt. And that's a fundamental trust issue associated with the insurance transaction. Representative Lehman expressed some disappointment with the industry relative to the level of engagement, perhaps with him personally relative to this. We've had a number of conversations, but I can assure Representative Lehman and I can assure the committee that this issue is a little bit like an iceberg. 80% of it is below the surface. In my organization at APCIA, we have multiple committees that are taking a look at this issue. There are significant operational and very practical challenges associated with this. And there are some very interesting, very complicated questions that are being asked amongst our members. Representative Lehman and others, the model in the 30-day materials proposes what we would refer to as a dynamic notice. That is a notice that is built for the particular consumer. That is significantly more complicated than putting together an enhanced static notice. We're also wrestling with the issue, given the complicated nature of multivariate rating factors and algorithmic-based pricing practices. How do you put something together that is going to explain things to a consumer in such a way that it is understandable? And when I use the term understandable, please don't mistake my statement in that regard to suggest in any way, shape, or form that I'm denigrating the ability of a consumer to understand things. But if you don't put together something that's useful, it ends in the circular file. How many different notices and whatnot have we seen that end in a circular file? So how do you balance the sometimes competing, sometimes not competing need to provide an appropriate amount of disclosure and transparency and do so in a way that's understandable and useful to consumers? It's not an easy thing, but I can assure you, and I know that in some ways I'm talking about generalities here, but we have some very smart, multiple people, multiple committees taking a look at this. And we understand the urgency associated with this matter. NCOIL has, again, taking a leading role in this. This is also an issue that is currently set to be or is being considered in various fora at the NEIC. And we are beginning to see an increasing number of individual states who are looking at this as well. So we do expect that the states, as well as others in the industry, are going to be looking to NCOIL for leadership in this issue. We intend to remain very focused, and we will be engaged with the committee and with the sponsor on this going forward. With that, Mr. Chairman, I'd be happy to answer any questions.
Thank you, Frank. Looks like we do have one question from Representative Meskers.
Thank you very much. I think this goes to the heart of a question of both fairness and inclusiveness in terms of coverage and understanding what, at some level, what that proprietary algorithmic model looks like is important to understand how you get to your pricing. I think I'd additionally add what would be helpful would be, as a state legislator, is to understand, if you're looking at the insurance pools across state lines, what particular policies we as legislators should be looking at to enact to drive down the costs of insurance. So what coverage are we covering, whether it be in property and casualty or health insurance? How do we improve outcomes through legislation so we can drive down the costs on the broad-based policy? So that would be helpful. I mean, you're going to go through all of it when you go through an algorithmic pricing. You're going to be looking at behavioral. You're going to be looking at the pools of risk you're insuring, trying to figure out how much you want to disclose your model versus your competitors' models. It's a hard request, but it would be helpful to get something that deals with policy as well, I would think.
Thank you for that question, Representative. I would point out that this debate and the companies that my organization represents and that Jordan's organization represent, that we're in the P&C space. And I know, based upon your comments in previous committee hearings, that you're particularly concerned about the health insurance space. Relative to costs and whatnot associated in the P&C space, yes, we like to price our policies with a sharp pencil, if you will, to borrow that cliche. Having said that, however, we are, unfortunately, in a high inflation environment. Costs are increasing for lots of things, including lots of things that we pay for when we are covering a claim. We do endeavor to price our policies in such a way that they are attractive in the marketplace while we manage our risk load. And your colleague, who I believe is an actuary in the industry, can well appreciate that as well. So it is a challenge, and transparency and communicating with our policyholders as well as with the regulatory community is an important part of that.
Thank you. We have time for one final quick question from Senator Filskowski.
This is kind of a comment, more so than I think a question, but I would like to know your opinion on it. I think we have to be very careful as regulators when we get inside these business models. Every insurance company has an appetite for different types of risks. And as agents, we know that. So we kind of gravitate towards that company. Maybe it's young drivers, maybe it's whatever. But we also have the ability, because renewals come out X number of days ahead of time, and if they come out with too high of an increase based on law, they have to come out 45, 60 days ahead of time, where we can take a look at that. Maybe we compare it to the next company. Rates are going to fluctuate, but if it's an excessive rate, it's got to get approved by the regulatory body in that state. So trying to put the burden on insurance companies to say how every little rate is developed, I mean, it's not like the days of a pen and a pad of paper where it was your age, the type of vehicle you drove, and what accidents you had. I can't even imagine everything that goes into developing the rates with a computer-based system today. I just think we need to be cautious on what we're demanding and driving up the price even further when there are options within a market and a competitive market for us as agents to be moving some of those risks around and answering those questions. And I'll be honest, I've never had an insurance company not send a letter to an insured with the explanation of why their rates went up, if it was excessive or we felt it was excessive.
Thank you. I'll turn it back over to Representative Lehman for some final comments.
Thank you. And again, I do appreciate it. Let me maybe rephrase how I started my conversation, which was the lack of engagement. I'll say it this way. I think those who are traditional, like Frank, you, and some others who are always here, reached out. We had conversations. I thought the industry might respond more as a whole. And I guess to the issue of we have other options. I think some of this, I've kind of put this into two categories: heavy lifting yet to do and light. I think of the light. We talk about the what's going to be the trigger to disclose. What's going to be the percent that we have an increase? How many factors go into this? Some of is it going to be new or renewal? We already know it's P&C only. And then some definitions. I think the heavy lifting still is going to be that narrowing the disclosure. And that is, we want to make sure we're protecting the proprietary information of the carriers. Their secret sauce needs to stay secret. But how is that utilized to where the insured still understands? You brought that you've never had an insured have an increase that they haven't disclosed. I'm from a state that doesn't have a mandatory, disclosure of a certain amount of increase. So some of mine just show up, and hey, I got my renewal in the mail and it went up 22%. Why? There's no requirement of a disclosure. So I think every state's going to be a little bit different, but I think that's going to be a heavy lift is in that disclosure. And that brings us to the operational challenges. In how do we disclose when we have such nuances of rating and so many factors that do go into this? And then do we put it in a format that's understandable to the public? We had credit scoring. We've had that for years now, and we said you have to disclose the main factors that went into that. So we've been down this path before. The difference is on credit, almost everybody's factors are the same. You got too much credit, you haven't paid your bills, or there's been too many inquiries. I can about read those like Karnak, and hold it up to my head because I know what that disclosure is going to say. This one's going to be different. So those are the things I think are more the heavy lifting. I look forward to working with both your organizations and your members in the next couple of weeks. So thank you, Mr. Chairman.
Thank you, Representative Lehman, and thank you all for your presentation this morning. We'll move on to the final topic, which is the consideration of the readoption of 5 model laws. The 5 model laws that you see listed on the agenda, per the NCOIL bylaws, all the laws must be readopted every 5 years or else they sunset. We had these 5 model laws on our interim meeting agenda last month for the purpose of soliciting feedback before we vote on them. We did not hear any comments at that time, but I believe this morning we do have a comment regarding one of the models. Feel free to come forward, introduce yourself, and make your comments.
Good morning. Can you hear me? Is this on? Thank you. Duke DeHaas with Allianz. Thank you very much, Mr. Chairman, for the opportunity to speak. I'm going to be very brief. Just wanted to talk briefly about the Travel Insurance Model Act, which NCOIL did excellent work on in 16 actually. And at that time, one state in 2017, the great state of Louisiana, was the first state to adopt a version of the NCOIL Travel Insurance Model Act. Subsequently, the NAIC did work using the NCOIL framework as the basis for the NAIC Model Act, which they eventually adopted in 2018. We are now up to 29 states. It has been extremely successful. It's extremely important to the industry to establish a regulatory framework and some certainty for the industry. We're continuing to work out west primarily now, but thank you again for the opportunity to speak, and we support the readoption of the model. Thank you again.
Thank you. At this time, I will take a motion. We're going to just consider all 5 of the model acts for readoption at once. So I will entertain a motion to adopt the 5 models.
Mr. Chairman, I so move.
A second.
We have multiple motions and multiple seconds. Thank you to the committee. All those in favor?
Aye.
and the models are readopted. Any other member have any business that should come before the committee this morning? If not, I will move that we adjourn, and we look forward to seeing you all in November. Thank you.